Welcome to FXStreet. If you like our videos, if you like what we are talking about, please join us on YouTube by heading over to our channel and hitting the subscribe button. Specifically, if you like what I'm talking about, you can follow me on Twitter at JustAnalysis1. Taking a look at Chainlink today, really had a lot of bullish fundamental data come out. In fact, over the last weekend, I think I saw it on the front page of the Drudge report being referenced for some reason. I should have kept that article so I knew what I could remember, but I didn't. Price action wise, I mean, Chainlink was not immune to the selling pressure that occurred on Wednesday. Had a pretty sizable drop itself, moving as low as 14%, a little more than 14% on the day, but ultimately closing still a good amount, 11.2% lower. What you really see is a really good representation of kind of a textbook example of the strength of certain levels within the Ichimoku system. You have the Kijun Sen and Senko Span B, all both of them right in the same value area at the 2875 zone, and then you have the 618 fib retracement also acting as support in that zone. So it wasn't surprising to see a little bit of a bounce here. One thing that is concerning for an extended bullish period and outlook is that the RSI remains in bear market conditions, and Chainlink has failed really to have any sustainable rally above that last overbought level at 65. We've moved higher here, but really failed to have that momentum be reflected in the RSI. Composite index as well shows things are pretty neutral to drifting south. And as far as upside potential is concerned, I mean, we are very close to the extremes in the optics band, so upside potential may be limited. Looking at the point and figure chart on the 25-cent 3-box reversal chart, you see that there's a pretty standard looking, I mean, you could call it a bearish pennant or bear flag. Either way, it looks like a continuation pattern forming here. But the one that is particularly kind of damaging here from a bullish perspective is that there is very likely some type of, we could see a very ugly looking bearish sell setup occurring here. So the current X column has one X above this double top here, so I might call it a split triple top. And if it moves up another box, so two things can happen here. Actually, three things. First, if a new column of O's forms at the current, after the current X here, and it hits that sell entry at 2950, that confirms a pattern known as a bull trap. If there's another X that forms above at 3125, and we have the same scenario where a new O column forms and hits the entry at 2950, that would confirm a bullish fake out. Both of those patterns are bearish patterns, and using Fibonacci expansions and the combination of the vertical profit target method and point and figure, the projected zone that we would look at on a hypothetical trade with a theoretical profit target, that would be down at 25.25. Using the risk to reward ratio of a 4-box stop, that's roughly a 4.25 to 1 reward for the risk. The setup would be invalidated if the current X column were to move to 3150, or even if a new reversal column forms. Basically, if Chainlink were to move above 3150, this short setup here is invalidated. There are some long opportunities, but not on this point and figure chart, and not on that candlestick chart. There have to be a little bit more price action movement to look at any clear kind of bullish re-entry. So we'll keep an eye on that and update it as needed. That's what I see on Chainlink. Again, if you guys like what we are talking about here, and gals, please like, comment, and subscribe.